Lucid is skyrocketing today. Is the stock a buy right now? Lucid Group Nasdaq LCID is experiencing a significant surge in its stock price today, and it's all thanks to a game-changing announcement that has sent ripples through the EV and ride-hailing industries. The question on many investors' minds is this the moment to jump in, or is it still a risky bet? One Uber deal ignites Lucid's Robotaxi ambitions. Lucid stock is rocketing higher today following the bombshell news that the company has partnered with Uber for its ambitious Robotaxi program. This isn't just a minor collaboration. It's a strategic alliance that catapults Lucid into a burgeoning multi-trillion-dollar market. By providing vehicles for Uber's self-driving network, Lucid is diversifying its revenue streams beyond traditional consumer sales and tapping into a massive opportunity in autonomous mobility. This move signifies a significant validation of Lucid's advanced vehicle technology and its potential in the commercial sector. 2. A $300 million vote of confidence and a 6-year commitment. The partnership is solidified by a robust 6-year deal for Lucid to supply Uber with its vehicles, specifically the Lucid Gravity SUVs outfitted with Nuro's Level 4 autonomous driving technology. Crucially, Uber has also invested a substantial $300 million in Lucid. This cash injection provides Lucid with much-needed financial breathing room, especially as it continues to scale up production of its Gravity SUV. The commitment to deploy at least 20,000 Lucid Gravity SUVs over the next 6 years represents a significant revenue pipeline and a long-term anchor for Lucid's manufacturing efforts, easing concerns about its previous heavy losses. 3. High-risk, higher-reward, a transformed outlook. While Lucid stock has long been considered a high-risk, high-reward play, its prospects now look significantly better following this groundbreaking deal with Uber. Before this announcement, analysts often maintained a hold rating due to operational challenges and a competitive EV landscape. However, this partnership immediately changes the narrative. It positions Lucid as a serious contender in the autonomous vehicle space, competing with established players like Waymo and Tesla. While challenges remain in scaling production and navigating regulatory hurdles, the Uber investment and the massive order volume provide a compelling pathway for Lucid to achieve greater scale and potentially profitability. Investors are now re-evaluating Lucid's long-term potential, seeing it not just as an EV manufacturer but as a key player in the future of mobility. Forget everything you thought you knew about luxury electric vehicles, because Lucid Group Inc. isn't just another car company. It's a force redefining the future of mobility. Headquartered in the heart of innovation, Newark, California, Lucid Group is an American powerhouse that's more than just an automotive manufacturer. While their sleek, groundbreaking electric vehicles are turning heads and setting new standards for performance and design, Lucid's vision extends far beyond the road. They're also pioneers in energy storage solutions, leveraging their advanced battery technology to power not just cars but potentially homes and businesses too. And if that wasn't enough, their original equipment manufacturing OEM division is quietly shaping the future by providing cutting-edge components and expertise to other industries. Let's take a quick look at the vital stats of this electrifying company. Industry, automotive, specifically the cutting-edge intersection of automotive and suppliers. Founded 2018, a relatively young company yet already making monumental waves. Headquarters, Newark, California, United States, where innovation meets the open road. Chief Executive Officer, Peter Rawlinson, the visionary leader steering Lucid into an electrifying future. Employees, 3,900 dedicated individuals, a growing team committed to pushing the boundaries of what's possible. Lucid Group isn't just building cars. They're crafting an entire ecosystem of sustainable, high-performance technology. Keep your eyes on this name. They're driving change, one revolutionary innovation at a time. Uber's big bet on Robotaxis. Uber is revving up its autonomous vehicle ambitions, making a significant splash with new partnerships. The ride-sharing giant is teaming up with EV maker Lucid and autonomous software firm Nuro in a major push into the Robotaxi market. This move is particularly noteworthy as Uber had previously pulled back from its own autonomous vehicle efforts years ago following a fatal incident. For Lucid, this partnership is a game-changer. The news sent their stock soaring by a staggering 40% today, reflecting the market's excitement. Uber plans to purchase 20,000 Lucid Gravity SUVs over the next 6 years for this new Robotaxi service. While the Gravity is a high-end luxury vehicle, starting around $80,000, it's expected that a more tailored version will be used for the service, likely targeting upscale urban areas. Nuro will be the brain behind the operation, providing its Level 4 autonomous software to power the vehicles. Uber isn't just buying cars, it's also making substantial investments, $300 million into Lucid and a similar amount into Nuro to get this robotaxi service off the ground. The goal is to launch in a U.S. city sometime next year. Interestingly, both Lucid and Uber share a common major investor, Saudi Arabia's Public Investment Fund, PIF. This connection has many wondering if the PIF played a matchmaker role in bringing these two companies together. The strategy behind the alliance. Industry analysts are weighing in on what this partnership means. For Uber, it's a clear buy versus build decision. Instead of developing their entire autonomous stack from scratch, they're strategically partnering with established players. Nuro brings its extensive experience in autonomous miles, particularly from the delivery side, which provides valuable validation for regulators. While Nuro's miles are fewer than Waymo's, 1 million versus 100 million, it's still a strong contender in a market where many companies have abandoned in-house autonomous technology development. The choice of Lucid, a premium EV manufacturer, for a robotaxi service is also raising eyebrows. While Lucid's Gravity SUV is a luxury vehicle, the company has cutting-edge technology in terms of drivetrain and battery efficiency comparable to Tesla. This suggests Uber might be targeting a higher-end segment of the robotaxi market, at least initially. Lucid has faced challenges with manufacturing costs, with its premium vehicles costing significantly more to produce than Tesla's. However, the partnership with Uber aims to streamline costs. Lucid maintains that it has enough manufacturing capacity to handle Uber's order of 20,000 Gravity SUVs over 6 years without impacting consumer deliveries. The $300 million investment from Uber is primarily for the development cost to integrate Nuro's technology into the vehicles, rather than a major overhaul of Lucid's flexible assembly lines. Addressing Lucid's recent moves and market confidence. Lucid's stock surge isn't just about the Uber deal, it also comes on the heels of another significant announcement, a 1-for-10 reverse stock split. While historically such splits are associated with avoiding delisting, Lucid's CEO clarified that wasn't the case here. Instead, the move is a technical thing designed to allow certain institutional investors to invest in their stock and to help reduce market volatility. Lucid's CEO views the Uber partnership as a strong vote of confidence, not a lifeline. Uber's rigorous evaluation process ultimately led them to Lucid due to their advanced EV technology, offering superior range and uptime. This long-term partnership aims to open a new market for Lucid in the burgeoning robotaxi space. While the Gravity SUV is the initial vehicle for deployment in 2026, Lucid confirmed that other vehicles will eventually join the platform as the program expands. Today's trending tickers, beyond robotaxis. Beyond the exciting developments in autonomous vehicles, a few other stocks are making waves today. Railroad stock CSX, Norfolk Southern. These companies are seeing a bump after reports surfaced that Union Pacific is exploring a potential acquisition of one of its East Coast rivals. Such a deal, estimated to be worth tens of billions of dollars, would be transformative for the freight industry and would undoubtedly face intense regulatory scrutiny. Sarepta Therapeutics, SRPT. The pharmaceutical company's shares are up following an announcement of a major business restructuring. This plan includes cutting a third of its workforce, approximately 500 jobs, and aiming for $400 million in annual expense reductions by prioritizing lower-priority gene therapy programs. Despite reporting lower-than-expected preliminary second-quarter sales, the news that one of its key medications will remain on the market has provided a relief rally. However, Sarepta's stock remains down over 80% year-to-date, highlighting ongoing investor concerns despite today's gains. Is Lucid stock a buy right now? A rocket ride with a road ahead. Lucid Group, NASDAQ LCID, just strapped on a rocket booster The electric vehicle EV maker's stock is soaring today, up a massive 40.2% as of 1:30 p.m. ET, and for good reason. Uber Technologies has chosen Lucid as a key vehicle provider for its ambitious Robotaxi ventures, a move that could fundamentally reshape Lucid's trajectory. The Uber-Lucid deal, a game-changer. Imagine a future where your Uber ride arrives autonomously, a sleek, advanced Lucid vehicle pulling up to your curb. That's the vision this new partnership paints. Uber isn't just ordering vehicles. They're purchasing a $300 million stake in Lucid and committing to roll out 20,000 or more Lucid vehicles equipped with Nuro's autonomous vehicle software over the next 6 years. This isn't a small trial. It's a significant commitment that promises a substantial demand catalyst for Lucid's vehicles, starting with a launch in a major U.S. city next year. This deal offers Lucid a crucial lifeline. For a company that has been burning through cash in its quest to scale production and achieve profitability, Uber's investment provides vital operating capital and a powerful validation from a global tech giant. While the Saudi Arabian Public Investment Fund, PIF, remains Lucid's largest backer, Uber's entry as a major investor and partner is a strong vote of confidence. The road ahead: production, profitability, and a reverse split. Lucid's long-term success, despite this exciting news, still hinges on its ability to scale vehicle production and delivery numbers. The aim is to reach a point where it can leverage economies of scale to generate positive margins on each EV sold. The Uber deal provides a clear pathway to significant volume, but execution will be key. Adding another layer to the current situation, Lucid has also announced a plan to move forward with a 1-for-10 reverse stock split. This is often done to increase the per-share price, making the stock more attractive to a wider range of investors, particularly institutional ones who may have policies against investing in lower-priced stocks. While it doesn't change the fundamental value of your existing holdings, you'll have fewer shares, but each will be worth more. It's a strategic move to improve market perception and liquidity. So, is Lucid a buy right now? Given the immediate and substantial positive impact of the Uber deal, the answer leans towards yes, if you were already considering an investment in Lucid. The partnership provides significant demand, a guaranteed order book for tens of thousands of vehicles over the next 6 years, capital infusion, a much-needed $300 million investment, validation, a strong endorsement from a major player in the mobility space, diversification, a new high-growth revenue stream in the nascent Robotaxi market. However, it's crucial to remember that Lucid is still a growth company with a lot to prove. While the Uber deal drastically improves its outlook, challenges remain in scaling production, managing costs, and achieving consistent profitability. The reverse stock split, while aiming to improve market optics, is also a reflection of the company's current lower share price. The dramatic valuation pop today is a clear buy signal for those already bullish on Lucid's technology and long-term vision. It transforms the narrative around the company, moving it from a pure luxury EV play to a significant contender in the burgeoning autonomous ride-hailing sector. As always, investors should conduct their own thorough research and consider their risk tolerance before making any investment decisions. But for Lucid, today's news is undoubtedly a monumental step forward.